What is going on, everyone? My name is Kenneth Beard, and I'm here with Stock Indices, where I go over economic data reports, I go over geopolitical news, and basically just give out my assumption of the overall market trend and what I think is going to be coming up in the upcoming weeks. So, this week, wow, car alarm, cool. Sorry about that, but um, this week of April 5th, I wasn't really present every single day in the market, but I'm going to go ahead and just go over each of the economic reports that really matter to me. And I'm going to break it down from there as far as how it contributed to the overall market. So, Monday, we had three main reports come out. We had the market services PMI, which came out at 16.4. It was forecasted to come out at 60.2, and previously it was at 60. So we're seeing a bit of an expansion here for the market services PMI. So for the ISM services index, we hit at 63.7%. The forecast was 59.2%. Previously, we were at 55.3%. So for the ISM services index, we are seeing expansion on those as well. So we're seeing expansion on the ISM services index. For factory orders, we came in at negative 0.8%. The forecast was to be at 0.3%, previously 2.7%. So we're dropping for factory orders. So that was for Monday. Tuesday, we had one which is job openings. Job openings was expected to be 7.0 million. Previously, we had 7.1, but we came in at 7.4, so beating on those. For trade deficit, we came in at 71.1 billion, negative 71.1 billion. Was expected to be 70.5 billion, and 67.8 billion was the previous negative 67.8 billion, of course. So looking like we are dropping a bit for the trade deficit numbers. For consumer credit reports, previously we were at 0 billion. It says here it's odd number, 0 billion. We were expected to hit at 5.5 billion, but we hit at 28 billion for that. So pretty interesting number there. And basically, if you don't know what consumer credit is, that is basically, essentially what it is when people are being more involved in the open economy, they're going to begin to use their credit cards more. And so as people begin to use their credit card more, their consumer credit numbers will increase, which could show that people are spending more money, and whatever that means. To me, I really look at it to see, is there growth? Are people making more and willing to take more out with credit cards? So that's essentially what that one is. Thursday, we had initial jobless claims coming in at 744, expected to be 694, and previously we were at 728. So we are gaining people for our initial jobless claims. That number is increasing, which to me kind of signifies maybe more people. People are not working, but the economy is still, in a way, growing. People are spending money, so it's quite, strange to really wrap your mind around what's going on. But those are the numbers there for that. So the continuous jobless claims previously was 3.75 million and dropped to 3.73 million. So dropping just a bit on that. And today we had a producer price index come at 1%, previously 0.5%, and wholesale inventories at 0.6%, previously at 1.4%. Missing for that and beating for the price index. So let's hurry up and just get straight into these charts and break down what has actually been going on. So the market has been very overextended, not really overbought yet for the RSI as far as the daily chart goes. But of course, if we go into those lower time frames, we're gonna see, just to go to the 4-hour, perhaps you see, this is very overbought here. Not a lot of volume in this uptrend as well. Volume is actually starting, so they're definitely bidding the market up, and the market is seeing nice growth as we have recently just broke out of all-time highs. And here was, just this combustion. We would just start gapping up and making all-time highs. We're at $409.24 as of right now, 500 or the SPY. So very strong trend right now. Now, of course, we're going to have to see a correction sometime soon. And we'll know when the correction is happening, when we start to see a pullback. And it starts to take some days for the pullback to then continue its trend. So, who knows how long this can just continue to float up for. Like I say, it's never our job to entirely be for sure what's going to happen, but to put all of our data and the best scenarios possible so that we essentially put our probabilities more in our favor. So the market is floating a lot to the upside, and we're seeing a lot of upside potential, and even more upside potential as the market hasn't even really. That's for the S&P 500. The Russell steps here have just been consolidated as, unlike the S&P, we already had our big uptrend here, coming from $1,600 to $2,000 for the Russell 2000. So, we started down here. We had a very nice highs. We haven't seen new highs for a couple weeks now for the small caps. We've just been consolidating sideways, which is there's no problem with that. Of course, we want to, after a big uptrend, it's only normal that we see a bit of a cool down from that big explosive move that we had. So as right now, small caps are just trading sideways, just consolidating a bit. Well, not a bit, it's consolidating a lot, in my opinion. We haven't been really going anywhere but up and down erratically. So as of today, we're just kind of intertwined with this 50-day moving average, this simple moving average here. So we're just intertwined with this. So as long as we don't break below it, we're still in this consolidation phase and just kind of sitting back and waiting for the Russell 2000 to make a new move to all-time highs. For the VIX here, VIX is selling off into no man's land. So the volatility sure is showing us that the fear factor in the market is just about depleted almost. There's not much fear factor in the market, which lets us know that economic growth is just around the corner. Matter of fact, it's already beginning to happen. If you're not familiar with, and I'm pretty sure if you live in America, you already know that Biden's signed the deal for the $2 trillion plan, and that bill really, I feel like this is the effects from that, and the effects of the economy looking to open back up, as well as the vaccines and other things of that nature really being distributed to a lot of Americans. And so here we're seeing that fear factor in the market start to deplete, like I said. And so that's for the VIX. Let's go over crude oil here. We got crude oil futures made highs not too long ago, about 3 weeks ago, I believe. And then we saw just a very rapid downtrend. And we've just been kind of in this squeeze, this wedge, this symmetrical triangle, whatever you want to call it. To me, I have a symmetrical triangle built around it. But we've just been condensing in that area with some decent volume as well, in my opinion. Not a lot of implied volatility, but with some decent volume. So this could be a lead up to maybe another leg, another move lower, or another move higher. As of right now, we're sitting right below the 50 SMA on the daily chart. But if the strength begins to regain in crude oil, we could see this push back up, above $62 back to all-time highs, or, a devastating push lower past 56 bucks, or, our resistance levels or support levels, down below. But right here, we could see this push down and see another leg lower for crude oil. And crude oil was doing so well, but as of right now, not so much. So that's for crude oil. For the bonds here, bonds looking like it's making a bit of a double bottom pattern here. Look like it's bottoming out. So with this bottoming out, are bond yields increasing? And it's been like that for the past year for bonds. So if this, if we pull back towards that 50, it could really show us something about the economy and what's going on, and really give us that confirmation. My whole thing as far as interest rates go. So we know when stocks go up, typically bonds tend to sell off. They don't really go in the same direction. So, looking out for that. Bonds is looking like it is holding up right now. So, like I said, we'll keep our eye on that for bonds. For the Qs have been looking very strong. We were in a bit of a symmetric triangle for a while. Some pretty nice growth here. We're approaching all-time highs. So be prepared for all-time highs to be approached, and maybe some overhead resistance to start to come in for the Qs, for the Nasdaq. So that's all I'm gonna go over today. As far as my overall assumption in the market. If you guys enjoyed this video, leave a like and a comment and subscribe. I will be making each one of these videos every week, so you can stay tuned. I usually do one every Friday. And yeah, so I will see you all in the next video, and stay clean.